And this is a concept that's quite hard for people to understand. But the reality is, when you're doing a small amount of volume, let's say you do one deal, the risk is so high because it's basically either you make money from it or you don't, right? For that one property. When you do 10 deals and you don't make money on one or two properties and you break even on one or two properties and you make money on six, all of a sudden your risk goes down because what happens is you blend in your profits across the board, and you might not even make a loss on two. They might make a loss on one of them, whatever. But for me, risk comes from doing a small amount of volume. And that's why we are in the volume business. We buy probably about 5 to 6 properties a month, and that's what we sell as well. So for me, I'm not going for £1 million properties, £2 million properties, or even 600 grand properties. Our criteria is set where it's really, really low risk. And the reason is we only buy freehold properties under 300K, okay? We generally don't buy kind of in the Northeast. We're looking for the better areas like the Northwest, the West Midlands, the East Midlands. And I'm buying at a significant discount to what I know it will resell for, okay? Now, that's not to say that, we might not make a loss on one. I think out of 240 properties, to be honest, we've probably made a loss on 3 properties. But I'm also, even though I do volume, we've also got a system in place. When we analyze that deal, that's not me analyzing it. I've got someone in the team that will analyze it, that we've got a process for. And the reason is it takes emotion out of it. Because if I've got a connection to it, or if I'm thinking, I'm in a good mood, I've just sold something, I want to buy something, I might pay more for that, or I might make a decision that basically is based on emotion. Janica, who's in the team, she will analyze everything. She will basically come up with the final figure. And all I have to then basically come back to is just have an overview and say yes or no, basically, to it. But and the only time I actually lost money on properties is when we didn't have that process in, and I made a decision on that. And that was a wrong decision, but it was also I made a decision, so I stuck with it. So for me, that's how I would basically de-risk it. Is you need to look at what if things sold for an auction. So you're looking at comparables, not just on Rightmove, not just what's for sale. You're looking at what's actually sold for an auction, number one. And then number two, I call auction. I know pretty much 80% of the auction is all around the country, whether it's Savills, Auction House. So I'll pick up the phone and I'll call them and I'll say, we've had another property in that area that's actually struggled quite a bit. And I know what's selling well. So for example, right now, what's selling really well in auction is your 3-bed semi-detached vacant properties. What's not selling so well is tenanted properties, especially stuff with a lower yield. So you can look at that as an opportunity, or it depends how you want to look at it, maybe as a bit of a risk. So that's risk, right? That's kind of how we analyze risk. That's how we look at risk. What was the second question?
So when you're buying and selling these properties, what about all of the costs associated?
All of the costs. So we are absolutely stacking everything on bridging loans, right? So the way I look at things is if you can't make a profit with a bridging loan, then it's not a deal in the first place. Even if you don't take out the bridge loan, right? But the bridging loan is what either A, builds up your cushion, if you like, if you're not using bridging loan, or B, tells you whether it's a good or bad deal. So for me, we're stacking things based on bridging loans. We're stacking things based on what's the stamp duty. But let me tell you this, right? And not many people know this. As a property trader, and even accountants and solicitors don't know this, as a property trader, we have over 50 different stamp duty exemptions, only as a property trader. So let me give you an example. Sean's buying a brand new build home, okay? So you're buying a new build from a new build developer. You want to sell your second-hand home to me or the developer. We both don't pay stamp duty on that home. If you're buying a new build home, you get stamp duty relief if you're trading it on. And that's the key. I can't hold that house. I can't rent it out. I can't do anything with it. I can trade it. I'll give you another one as an example. Probate. If I'm buying a probate property, there's a whole set of criteria. Less than half a hectare, for example. You can only spend less than £10,000 on it. You can't spend more than £10,000. And then again, the person that's selling it to you, the deceased person that's basically you're buying it from their estate, the deceased person has lived in there within the last 2 years. If you tick all those boxes and I trade it, I don't pay stamp duty on that. So there's ways to get around stamp duty within a degree. There's a whole host of things. The other thing is there's ways to basically mitigate not having to pay the stamp duty, like a back-to-back transaction. So back-to-back transaction is effectively, I've exchanged contracts with Sean, I then go line up a buyer, and then my completion with Sean on the purchase and my completion in exchange with whoever it is on the sale is done the same day. So it's called a simultaneous exchange and completion. And there's something called stamp duty sub-sale relief, right? So people don't really know about this stuff because that's what the traders do. And the traders are like ninjas in this world. They don't really talk about it, right? So, but there is also times where I've stacked the deal where I have to pay the stamp duty. I don't always get around it. But everything is always about just stacking the deal according to what figures you've got in front of you.